Good afternoon, everybody, and welcome. My name is Noelle McElhatton, and I am editor of Marketing Magazine. And you're all very welcome to this webinar discussing consumer attitudes to financial services marketing, a hot topic, I think you'll all agree. My guests today are Tim Mack of NSI, National Savings Investments. Welcome, Tim. My next guest is Mark Roy. He is the Chief Executive and founder of the Red Group, and he is also DMA Data Council Chair and CEO. And myself, of course, the Editor of Marketing. You're all very welcome. Thanks for coming. For openers, Tim, could I ask you, where are we at with financial services marketing? The days of carpet bombing the adult population of the UK with credit card mailings are long gone, I think we agree. But also we've seen financial services marketing reeling in as a result of subprime crisis. So where are we at now today?
I think you can't dissociate any marketing activity from the overall brand and how that projects the business and how it services its customers to build a reputation. And in many cases, you might even say rebuild a reputation. And if anybody's rebuilding or starting out on a new relationship, any particular action is monitored, and people are much more sensitive to any element of marketing than they were 2 or 3 years ago, for what it might indicate about the brand and what the relationship might give them.
Mark, you're nodding vigorously there. Do you agree?
I agree wholeheartedly. I think in many respects, as somebody who's sort of responsible for trying to get this industry to do things better, in a rather perverse way, I think the recession's done an enormous favour. I think it's allowed us to wake up to the right way to deal with consumers. I mean, you're right, the carpet bombing model has gone, but it's gone because it doesn't work anymore. Consumers understand the way that direct marketing works. And I think what we're seeing, and I think what the future holds for us, is a much rosier future. And the fact we're looking at low volume, high frequency, suddenly you're getting consumers who are telling us what they want. And maybe for the first time in the ages that I've been doing this, we're getting to a point where actually we as an industry are really genuinely starting to listen to what consumers want and then, most importantly, delivering on it.
Well, I believe you. Your perceptions as practitioners are all very well, but what do consumers actually think? And Mark, you've actually put your money where your mouth is and conducted a nationwide survey of consumer opinion and perception of trust in financial brands. A pretty comprehensive survey. Sample, I think, of 2,330. Eloise, if I could introduce you. Eloise Rappaport is the author of the report. Do you want to talk us through it, Eloise?
Yep. The Red Report looked at a sample of 2,300 adult consumers. They were randomly selected from the consumer research specialist FastMatch Consumer Voice Panel. Criteria for the selection ensures that the results are from a representative cross-section of UK consumers in terms of age and gender. And the panel was closed and members of the public can't join voluntarily. Instead, they are recruited via a number of sources to ensure the panel remains representative of the UK adult population.
So the first question, Eloise, that you asked was, which of the following financial products do you have? The majority have a bank account.
Yes, the initial question was intended to find out what financial products or services are most prevalent amongst consumers. And not surprisingly, most people have a bank account, 87% have a bank account. But a surprising number also have a PayPal account, that's 68% in total. The most likely explanation for this is possibly the unprecedented rise in e-commerce during the past decade. The largest of the e-commerce giants being eBay, which happens to own PayPal and encourages customers to set up accounts and settle purchases via this system. Worryingly, only 39% of the sample, a mere 1.67 million UK adults, have a pension and only 31% have a mortgage.
So it's fair to say that financial services is a sector that touches everybody in the country.
In some cases, not as much as it might be. I mean, particularly looking at that pension figure of 39%, or indeed the savings account figure of 60%. The NS&I quarterly savings survey indicates that only around 50% of the population save in any way on a regular basis, and even less than that have 3 months cover to be able to live through the bills of everyday life if they're not earning. So that even suggests, quite rightly I think, that quite a lot of people have got a savings account, but there's probably very little in it. And I think there's a real tendency for the industry to focus too much on the older, richer, wiser consumer and not enough on the people who, from their own benefit, are perhaps headed that way, and from the nation's particular perspective, the people who haven't got a pension and haven't got savings.
It's a pretty big issue. I think one of the surprising findings there, Mark, is that 68% have a PayPal account. What do you read into that?
Well, I was shocked with the findings, I have to say. I mean, some of the other figures, I agree with Tim, are really most surprising in terms of the lack of uptake and in terms of both pensions and in terms of mortgages. The PayPal thing is particularly interesting. I don't, unfortunately, know how many people are subscribers to eBay in this country, but I suspect that it's actually not as many as we think it is. I mean, because I think there's a very clear demographic around the issue of eBay. I think the vast majority of people, perhaps in the sort of lower end of the demographic, are more likely to be on eBay, and probably those of a different demographic wouldn't admit it when they were on eBay anyway, I would think, to some degree. Clearly, the PayPal thing, I think the eBay thing it clearly adds to the fact in terms of people using PayPal accounts, but certainly from an internet point of view and internet transactions, people clearly are finding that way a very efficient way of paying for things. And also I think the issue of of financial security is one that really pushes people into that. PayPal clearly go to great lengths to try and provide people with assurances in terms of how their money is transferred. I think increasingly these days people putting credit card numbers into computer systems is really concerning for them.
Yes, I mean, data privacy is an absolutely huge issue now. We have Sony to thank for that. Tim, what do you think that fiasco has done for the whole issue of data privacy?
I think we have to work very, very hard to reassure people, and every incident like that means we all have to work that bit harder. I think consumers appreciate the convenience of what online and IT gives them in terms of 24/7. But having said that, people are very, very wary and even scared every time they hear a story of something relatively recently, people making a deposit into an account and finding that it had gone into the wrong account. Doesn't happen very often, but that grows and grows and grows in the blogosphere and has people talk to each other in daily life.
I think there are a couple of extra things to add to that one. I completely agree. We're clearly going to agree with each other a lot, Tim and I, on this today. But I think that he's absolutely right. The real issue is that, of course, it doesn't have to be a big incident. The reality is we're dealing with individuals here, and if an individual has an incident, they'll be responding to that, and they're going to be telling their friends about it. And this is really the danger. This is where it's changed these days, particularly within social networks. I mean, this can go like wildfire sometimes. So I think, again, I think it's probably perhaps a good thing that companies are now realising that actually it's only one mistake that can actually, compound the problem. So actually people are really starting to deal with one-to-one communications increasingly.
And our next question, Elise, it is, which of the following financial service providers do you currently have a relationship with? We're really digging deep now.
I think the point of this question was to identify if any rising stars were challenging the status quo. And as we expected, the front runners were leading high street banks Lloyds, Halifax, Santander, NatWest and Barclays. The AA were the most popular insurer, and MBNA were the top credit card only organisation. The research also wanted to identify any rising stars, as I mentioned, and out of the 43 brands, Tesco, the UK's biggest retailer, with a brand value of 25.7 billion, was the 8th most popular financial services brand, and they seem to be fast fulfilling their promise to become the people's bank. However, although retail brands are gaining ground on traditional financial brands, they do not yet pose a significant threat. Sainsbury's is only ranked 18th and Asda 31st.
I mean, what should we make of this? Is this are these results telling us that the solid, worthy brands like the AA are the ones that they put their trust in?
I really think we were talking about perceptions and reassurance, and we've talked about in the survey the big banks, and I think there's a clue there in terms of the size. Are they too big to fail? And then we talk about the top retailer, and it's the biggest retailer. I think people are taking some reassurance out of that.
So size matters.
Well, on the one hand, they're unlikely to go away, and you're going to be able to find them if there's a problem.
I mean, there's a strange irony in that, isn't there? I mean, again, I think that's probably right. I think in a recession, fundamentally, whether it be on a B2B basis or as a consumer, one has an inclination to buy safe. I think you're not likely to be perhaps going with your investments to somebody you've never heard of, at least of all in a recession. But also, one has to bear in mind, those names that we were talking about, the Lloyds, Santander, NatWest, they are the ones that, from a public point of view, have been berated beyond belief over the last 2 or 3 years for the way that they have behaved. And this hasn't obviously, and this has been made worse by the income protection scam that's been going on, and we just ruled against. And all the major banks these days are now, I think they just reported their results, and they put huge contingencies in for claims against them. So there is a strange dichotomy there, isn't there, that these major brands that we feel are solid and trusted and everything else actually are the ones that actually have been the butt of our anger over the last few years for the terrible way and irresponsible way in which they've been lending.
Well,
I think
Tim, does that not tell us that they've done a great marketing job? So we've been through the subprime crisis, and all the ramifications of that, the fall of Lehman Brothers, the resulting recession. These brands have done pretty well to have overcome all the negativity surrounding those incidences.
I think if you ask people about banks in general, they will always rate them well below their own particular provider. So I always rate my bank over all the others. And I think part of that is because you want to believe that the one that you've selected and stuck with is a good one. Having said that, I don't think we should underestimate some of the marketing effort over many years that they have made to successfully upsell and cross-sell, and therefore the benefit to the customer being a one-stop shop that's more easy to manage.
Mm-hmm. Just to put that in context in terms of the recession, I think it's an interesting one, but for somebody who regrettably is old enough to do this to be my sort of third proper recession, I think we have found this to be very different than previous recessions in so much as that, particularly in the financial services sector, if you stop marketing, which is typically the result in the 80s and 90s, what you're actually immediately sacrificing these days, and what is an increasingly competitive market, is market share. These organisations have not been able to just say cut the marketing spend. They've had to be smarter. They've had to get more pounds out of their budget and to get more value out of the pounds that they're spending. So maybe perhaps that has had something in terms of the way that their position has held, because some of those organisations that are also on this list have not been around for longer than 10 years themselves, and this is the first recession that they've been involved in.
Indeed. Lee? We've got a question, actually. No, we don't. I would like to invite the audience to send in their questions. If you press the button on the screen, is that right, Georgia? You can submit questions to our expert panel. Now for our next slide. We asked, Red Group asked, please rank the financial services according to how much you trust them with your personal data. This is a pretty crunchy issue, isn't it, Mark?
Well, I think that, if we get Elise to tell us about the specifics, and then we can cover that one.
We asked consumers to rank organisations according to how much they trusted them with their personal data. And overall, independent financial advisors are the most trusted provider by consumers. This was followed by banks and building societies and then supermarkets. By comparison, consumers have least trust in lenders, credit card companies and comparison sites when it comes to safeguarding their personal information.
Well, there's a dichotomy here again, isn't there, in so much as that they're the least trusted, but actually when it comes to use, they're actually using them more. So again, I think Tim is right again that fundamentally, if you have a relationship with an organisation, the reality is that you almost have to insist on telling yourself that they're great. So there's a quizzical thing here. Clearly, this is big strength for the big organisations again. But I think the factor of trust is really where this industry has to go in order to, as we go forward and we deal more and more with one-to-one communications, we've actually got to get ourselves to a position where we're instilling trust in the people who are working with us and how we're going forward in terms of our marketing. I don't know what you feel, Tim.
I think this does indicate that a lot of people's judgment is informed by their emotions and what they want to believe rather than what they actually know. And this prompts, alongside what I was saying about only 50% of people having any savings, that there is a real need for the industry to work with a lot of other organisations and people to bring about behaviour change where people are much more enlightened about financial services. And I'd suggest it's possibly a little unfair putting lenders and credit card companies and comparison sites in together, but what might be what people might be seeing in common with them is that you go with them at your peril and at the risk of being caught out. And maybe if you take those services from a bank or building society that you and your family have dealt with for some years, you feel that's less likely to happen. And if it does, you've got some sort of recourse.
Do we think perhaps the IFA I thought was a very surprising result, because one expected it to be banks. I mean, certainly, again, we're old enough to remember that that's certainly what our fathers would have told us. But I wonder whether the IFA thing actually is because one has personal contact with them. Because your IFA, you have to look in the eye, you shake their hand, you do that. Whereas a lot of the other organisations, increasingly, certainly from a banking point of view, actually it's sort of distance selling, really. It's distance service. There isn't that one-to-one personal communications. So maybe people are making an assessment because they have direct contact with somebody and they're going, yes, okay, I trust this chap. Or woman, sorry.
I just want to go back to an earlier question and throw it out actually to the audience today. Do you think financial services retail brands are actually posing a threat to the more traditional providers? So remember, Tesco and Sainsbury's ranked quite highly in our question. So yes, no or unsure, please do vote. We're also getting in quite a few questions from the audience. I'm just going to pick one randomly. We've got Colin McDougall from AXA Sun Life, and he's asking, did you try and differentiate between trust on not to lose or abuse your data? He's saying, I suspect that those at the right are better at looking at data than some on the right.
I don't understand the question.
I know. There's a little repetition in there. Tim, can I throw it at you, please, if you could shed some light
I think
there?
that's what that's saying is some are better at using and not abusing data than others. And I think it does come back to the key things that Mark was talking to me about earlier today, which is the importance of relevance for people. And within relevance, it's what, when, how, and why. And I think that whilst we talk about the end of carpet bombing, there are still people who are sending out far too much to far too many people, and it does undermine their credibility.
I think also it's about acting responsibly. I think, again, as we go down to the change, the issue of trust and data, I would be so bold as to venture that perhaps that HMRC and Sony right now are not terribly well trusted because they've demonstrably not looked after people's data. So, and I think, the reality is, and there's some further questions about getting poorly targeted marketing literature and things, etc. But I think actually the real cost of these things actually is in terms of how your brand is perceived, because in this marketplace you can go elsewhere. If we all know that Sony have various competitors in that marketplace. Well, if you don't trust Sony, I'd be very interested to see in a year's time how Sony's market share has been hit as a result of this data loss.
So if you were advising Sony on how to recover from this debacle, Tim, what would your advice be?
I think what does surprise me, and it's back to my sort of emotional perception point, is the resilience of strong brands. And actually Sony is a strong brand. So data that we look at would indicate that if they manage this correctly and do the right thing, they can win their reputation back. Now, to take an obvious comparison, Northern Rock's reputation went down and stayed down, whereas others, BA, for example, when they had the Terminal 5 opening, went down on their brand reputation very rapidly. But because of people's emotional investment and wish to see that brand come back, it did. So my advice to Sony is anticipate, manage it correctly, and if your brand's strong enough, you can get back from this.
Because financial services are quite a low interest category, aren't they? Purchase.
Yeah.
You talk about emotional investment.
In more ways than one.
Well, strangely enough, it always used to be said, who's going to watch a financial services ad when there's a good car and a beer ad coming on for blokes and other things for women? But clearly the last 3 or 4 years have led to heightened awareness of financial services offers. but not in a way that I think traditional above-the-line marketing can affect, in the way that their service and how they look after their customers really does affect their fortunes, because people don't listen to advertising in the way they used to. They turn to friends and family.
That's absolutely right. I think the issue is that it's action speaking louder than
Yeah.
words. A cliche as it is, but actually, you know, and we talk about a lot of these things in terms of when we look at the city as a whole and public demanding, you know, a change of behaviour, and that's what's required right now. I think for somebody like Sony and HMRC, you know, they have to make genuine changes and prove, and that's this way. Trust is not earned. You know, you can't. Rather, trust is not bought; it's earned. You've got, and the only way you can earn trust from consumers is to demonstrate that you are trustworthy.
Thanks, Mark. I'm going to throw out another question to the audience. Are things improving? Do consumers trust financial services companies with their personal data more or less than they did a year ago? And we're asking you to click on more, less, or just the same. So now for our next slide. Taking a little while to queue up there. So the question, Elise, was...
Consumers were asked how they would react if they received incorrectly or badly addressed postal direct mail from a financial services company. 43% of consumers said they would complain directly to the company. Only 7% said it would have no effect on how they felt about the brand. More worryingly, 18% said it would negatively affect their opinion of a brand. 13% would be less likely to interact with the brand in the future. And 4% said they would never use its products or services again. This equates to over 15 million UK adult consumers who would have a negative and potentially harmful impression of a brand.
That's interesting. Nearly half said they'd complain to the brand directly. I mean, I'm amazed at that. I thought people in the UK didn't complain at all.
Yeah, well, I'm absolutely with you. I have to say, I've written down it's an extraordinary figure. Certainly a few years ago, and we've done previous research in the past to show that people just throw it in the bin, you know, if they're upset with it, they're not doing it. So I think there's an interesting thing here. What would be very interesting was to be a comparison, and I think probably the answer here, a comparison between financial services as a sector and perhaps an alternative sector. Because I think actually what this figure shows is testimony to how consumers feel when they're involved with a financial services organisation. I think people actually perceive that there is a seriousness about what it is that they're doing, and I think that if they're getting a mailing from somebody where the details are wrong, they're actually saying, "Look, I want you to take this seriously. I want this to be right," because they feel that getting the details right on their mortgage. And I think this comes back all the way again to data and whether people actually believe the data and whether the data is accurate. I think clearly consumers are feeling inaccurate data on a financial services mailing. I need to do something about it to get it right.
Yeah, I think for marketing people, this is a key one. If I look at our behaviour at home, which is usually not indicative of anybody else at all, if I get some marketing stuff through and it's for someone else, I'll usually write that and send it back, because the fear is that your identity is being confused or could be stolen and replaced with someone else's. And if that's being done by a financial provider, it could lead to someone chasing you for money where actually it's someone else who ought to be paying them. And I think that the whole data thing means that, yeah, people used to get away with the odd Mr. Miss and get it wrong, and people complained. I think they're absolutely right to complain now on any particular detail that is wrong and get it put right.
How acute is the identity theft issue? There was a lot of publicity about it. Capital One even based a whole ad campaign on it. Has the fear, do you think, amongst consumers that their identity is going to get stolen, has that subsided a bit, do we think?
Let's think of a way of showing that. Shredders. Shredders are now for sale in mainstream retailers. They never used to be, and most people I know have got a shredder because they don't dare put valuable documents in the bin.
I think Tim's absolutely right. I don't think it's gone away at all. In fact, if anything, I think it's getting worse. I think the reality is, when money's tight, people are absolutely terrified about it, and I think we constantly hear about these stories of the most importantly about how difficult it is. If this happens to you, how people's credit record is destroyed for years, and how they're having to continue to pay money back, and bailiffs turning up on their door. You know, our dear friends at the Daily Mail, etc., are very good at fanning the flames of panic around these things, etc. But the reality is they are all based on fact. And I think Tim's right. Look at we sometimes as practitioners forget that actually we are consumers ourselves. I don't know about you guys, but certainly whenever we throw post away, the address of the letter and any details always get ripped out and get moved differently, or actually go to be shredded somewhere along the line. We too have a shredder, I have to admit, sadly,
ask, yes.
you know, and I'm afraid, you know, it's just the way of the world these days.
We're getting quite a few questions from the audience. I want to throw this at the panel. John Clements from Stanyforth, he's asking, does genuine one-to-one communications in financial marketing require a huge culture change in the financial services companies themselves? Tim, this is one for you, I guess.
I think that's a really good and big question. I think the example I would pitch at that is, unlike most of the people listening in to us today, I have changed my bank account in the last 10 years, and it's pretty tough. I moved from a high street provider to First Direct, and then being fairly typical of First Direct customers, I now know, after 3 or 4 years, I stopped dealing with them on the phone and went online. But my perception is that I'm still getting a personal service. And I happen to have found out recently that First Direct customers think they get a much better service out of the hole-in-the-wall cash machines than do HSBC customers, even though they're the same machine, because of the telephone contact they've had previously and the way in which the brand projects itself. So I think it is possible to do mass marketing and individual marketing, but clearly the First Direct example is probably aspirational for most.
I might just broaden that one. I mean, I think it's an interesting point. I mean, you've got to sort of pose the question, perhaps, what is one-to-one marketing? Well, we haven't got that long to deal with that one. But I do think the reality is that if we're striving to create a one-to-one environment, it's about the way that all financial services organisations behave. So I think that the closer you can get to your consumer and the closer that you can get to your prospective customer and delivering what they want, the more likely you are to be successful, I think. That's really the key point. It's about, I think as an industry, we are starting to change, and I'm certainly from the clients that we're working with, we're seeing a lot of changes going on in terms of people really striving to deliver what consumers want. Now, that may sound weird, but for somebody like myself who's been in the business for 25 years, for the first 2 decades of my involvement, most of the phrases lying around here were like, well, consumers don't really know what they want, we'll just send them what we want to send them.
Mm-hmm. We're getting some more questions and observations in. Graham McDermott from the AA, he must be very pleased about the survey so far. He's saying, going back to the fraud, identity theft issue, I think the 43% is coming from people concerned with identity fraud and questioning if brands such as his have the wrong details. He's talking about the AA, they've seen dramatic rise from people complaining, saying exactly that.
Well, I mean, Graham has been at the AA since it began almost, I think, probably, etc. But I know that the AA, and Graham being responsible for it, takes these issues incredibly seriously. And it may be actually because they have such a tight focus on the way that they deliver, maybe that's why actually they're doing so well here. Maybe the AA is leading the way in terms of the way that actually the feedback they get. And he's done incredibly well as an organisation when pitched against other people.
And now for our next question in the survey, Elise.
Should something go wrong and consumers were dissatisfied with a marketing communication from a financial company, we asked our sample who they were most likely to complain to, if at all. The FSA tops the list of official bodies to whom consumers would be most likely to take their concerns to if they were unhappy. In fact, nearly 60% of consumers say they would definitely complain to an official body. 26% would go directly to the brand, and 49% of all consumers surveyed would complain twice, once direct and once to an industry body. Only 35% would do nothing.
So this is telling us really that marketing communications have a lot bigger impact than we might think. You know, nearly 60% would complain to an official organisation. Only 35% are saying they would do nothing. Does that surprise you, Tim?
I think of what we've said, I'm still quite surprised at how prepared people are to complain, but I think it is indicative of the trends of recent years. I like to think that I work for a brand and indeed deal with brands where I am confident to contact them directly at first instance. And I think it's quite shocking that that's the minority here. I did actually call up First Direct over a marketing communications problem, which is that in a given week I got about 5 or 6 bits of stuff.
Is that all?
And actually, I was just calling about an account query, and I said, look, could you just back off a bit? And whether they'd just given up on me or whether they responded, it had the same result. And I think for us marketing folks, we really, really need to aspire. We're all going to make the odd mistake, I'm afraid. We need to try very hard not to, but above that, try to be the kind of organisation that people will come back and tell us when they've got a problem and not everybody else. As they always used to say in local businesses, if you think we're good, tell everyone. If you think we're crap, please tell us and give us a chance to sort it out.
What strikes me is that, in my own personal experience, is that the financial services brands haven't achieved the much vaunted single customer view.
Yeah.
I'm not sure why that is. Is it a technological issue? Is it to do with the data protection? They can't merge databases. From a very well-known high street bank, I get mailed offers from different parts of that bank, potentially in the same week. Your experience, Tim, is it a kind of legacy database issue?
I think
or is it a communications issue, a structural issue internally?
I think the legacy stuff, I mean, speaking as a marketing person who is usually talking with colleagues who are customers of the data and IT people, it surprises me that even organisations that put in massive growth less than 10 years ago have got flexibility problems with what they call legacy systems that are less than 10 years old. And I think that is pretty fundamental.
I mean, the answer to your question, Noel, I think is probably all of the above.
Yeah.
So certainly my experience of this and dealing with dozens and dozens of financial services organisations, all of those issues are very real for them. And I think a resounding support for your view that actually FS struggles to have one customer view because by definition, so much of what they do is about cross-sell. You've got this huge sort of circle of life where you buy insurance or you buy you take a loan or you do something or other, and now the real money-making machine kicks in. It's about how you can now get those customers that you've already acquired to do other things with you. And I think that, consequently, and one knows, certainly with a lot of the financial services organisations, the reality they are completely different divisions with a centralised database, and the right arm hasn't the faintest clue what the left hand is doing. And this is a very common complaint, both at the DMA, and I'm sort of saddened to see that not more people are complaining to the DMA. And actually, I'm slightly saddened, although surprised by the number, but not that more people aren't complaining, because we need to complain. As Tim quite rightly says, unless people bang on the door and bang their fist on the table and say this isn't good enough, how are we going to get the industry to change their actions? Because they need to interact correctly with consumers. And I've banged on for years about, good information is great, but bad information is even better. We need to have people saying bad things so we can improve it. It's very much back to the local analogy. If you can get a major bank to respond to what Tim was saying earlier on and actually give us a chance to do it better and genuinely do better, then I might be eating a few hats, but who knows?
But do we really want to revisit the consumer uproar of I think it was the summer of 2006, Mark, we dubbed it the summer of discontent, where consumers were protesting about junk mail and the Daily Mail picked up on it. And it was its headline story, and the industry was on the back foot, had to defend itself. Yeah. And a lot of the very good brands that do good practice in marketing got tainted. And it must have had led to very awkward questions being asked within brand companies. But we don't really want to go there again, do we?
Well, no, we certainly don't want to return to that. But nonetheless, I think you've got to go back, and you're absolutely right. It's an interesting one, but you've got to look at the reasons for that. I mean, I think that year we mailed 5.2 billion pieces of direct mail. Not to mention door drops, emails, everything else climbing. There was a reason why consumers are going, enough is enough. There was a reason why the Daily Mail ran the headline story. There was a reason why you were on Radio 4, I think, trying to defend the industry and those sorts of things. The reason why it got to that is because we were being, along with the rest of the financial services sector, about as irresponsible as one could be in terms of using this data. The reality is what I was alluding to earlier on in terms of the recession, is that actually the recession has actually seen a less commoditized view of what we're doing. I think we'll probably do about 3 billion items of mail this year. And guess what? Complaints from consumers, per capita are at an all-time low, and more people actually are complaining. This is good. We're at a point where actually consumers are now feeling that actually they're being listened to, and we're actually sending out less and more appropriate. I don't know about everybody else on the panel, but I've seen hardly any direct mail in the last couple of years because volume is way down, and what has come through tends to be timely and pertinent. So in a marketplace where spending your money carefully is the order of the day, then actually suddenly direct marketing improves.
Yeah, I would like to give a strong plug to the Sustainable Mail Initiative, which is the DMA working with the Royal Mail. We were very pleased to sign up early on that, and I'm sure you can find the criteria on the DMA website, because that's all about not just how you do the paper bit and how you're as green as you possibly can be, but above all, it's about the management of the data. And in fact, the new higher standards of PAS 2020 are coming upon us now as well. And so I really would urge everybody to have a good look at that.
We're getting a number of listeners asking us, will this discussion be available, will the slides be available on demand later? Yes, I'm pleased to tell you the webcast will be available on Brand Republic from tomorrow in the archive webcast section, and the full report will be sent by email to all the listeners today from the Red Group. I want to throw another question out to you, the listeners. The question is, in your experience, do these results ring true? We were talking about the question preferred method. What do you find works best for your acquisition campaigns? Could we have that slide, Elise?
Okay. Which of the following have sent you inappropriate or irrelevant marketing? Consumers were asked to recall which financial services organisations they had felt had sent them inappropriate or irrelevant marketing in the past.
Very good.
And the good news is that the majority, 51% of consumers, couldn't recall receiving any inappropriate marketing from financial services companies. However, the worst offenders, according to the survey, were loan and credit card companies with 29 and 26% respectively. In contrast, only 9% of consumers received inappropriate marketing for banking or pension products.
Thanks for that, Elise. Mark, do you have any observations?
I'm absolutely stunned. Yeah. I have to say, 51% of people. Where have these people been? That they haven't got themselves onto people's databases. I think clearly the negative side comes actually back down to the cross-sell side. Financial services organisation trying to get there. I think if people get to a point where actually they're starting to get huge amounts of direct mail, they've obviously done something within their relationship to strongly indicate that they want to buy insurance or they have an investment portfolio or whatever it happens to be. I did interestingly to see that actually income replacement was asked about, etc. And in the light of what's happened in the last week in terms of income protection, I wonder whether that's got to be. I wonder whether that might rise significantly over the coming months as we look at those sort of things. Tim, what do you think?
Again, this looks to be the tolerance of us Brits. I do wonder, however, when we say have been sent, whether people have answered this question perceiving mail over email. And it would be interesting, perhaps, if we do another run of this, to separate mail on email, because I would imagine a lot of people have been sent inappropriate email communications from financial services providers, because it's easy to think it's quick and cheap.
Yes, I think you're probably right. I think the mix of these products is obviously quite interesting. I'm also very surprised actually how low the credit card mailings are. I mean, I would think if we'd gone back a few years ago that you'd see a rather...
They're probably just targeting you.
or indeed you, Tim. Who knows? But I think that was really very surprising, because certainly, I mean, credit card companies were typically talk. Noel, you'll remember when we did the what was the program where we got first, second, and third. It was junk mail call centre. Yes, the watchdog one, wasn't it? And we got the most hated industry sectors, and it was or something. It was
financial services was
number one.
The direct marketing industry came second. Sorry, Tim. But we've come a long way since then. I just want to give some results now of the polls we've been throwing at you, and thank you very much, everybody, for participating. So one question we asked: do you think financial services retail brands pose a threat to the more traditional providers. And bear in mind, just to remind ourselves, Tesco and Sainsbury's look like they're gaining ground on the high street providers. An astounding 82.86% have said yes. Yes, they do think that financial services retail brands are posing a threat to traditional providers. Only 11.43% said no, and there's 5.
That'll be the traditional providers then.
Yeah, they're all listening. 5.71% said they were unsure. So, Elise, the next question from the survey.
Yeah, and I think as well there were perhaps the results of this question as well. Are things improving or no?
All right, let's go to that. So we asked you, are things improving? Do consumers trust financial services companies with their personal data more or less than they did a year ago? Again, very, very black and white. 42.86% said less than they did a year ago, and 57.14% said the same. Tim?
Right. Okay.
What's that telling you?
There's a heck of a lot more to do, and I think the challenges get bigger and bigger. And maybe the industry just needs to move very, very fast to keep up with people's needs.
I would agree. I mean, that's a slightly surprising result, really. I would have thought. I mean, maybe it's because we're practitioners, but I think that it's obviously disappointing that people feel that it's going down. But I suppose the follow-up question would be, well, what are we doing about it? I mean, this is what Tim's alluding to. I mean, we need to get our act together to be able to do that, because you have to stop this decline. And if we've talked a lot today about trust, and we talked a lot about trying to persuade consumers, to trust us. And if 46% of us, 42% of us believe that actually trust is going to be less going forward, then we've got a problem, haven't we? We have to change something. We've got to make a difference somehow. Try the next slide. Let's have a look at this.
So the next slide is with all the different channels available to marketers. Consumers were asked how they prefer to hear from financial services brands. Although the percentage differences were marginal, the research showed that 39% of consumers would rather receive marketing communications by email from companies they already have a relationship with, and prefer direct mail from those they don't. Women have a slight preference to direct mail over men, who would rather receive an email, and 45% would prefer not to receive any marketing from companies they don't currently buy from, which obviously makes it tricky for marketers.
Mark, your business was founded on supporting direct mail. To what extent is it still based on direct mail, or are you more biased now towards email and other channels?
Well, fortunately, it was founded 20 years ago, so it's changed quite a lot since then. But I think that, I mean, as any sort of service provider, you have to allow yourself to be adaptable and to be able to provide what your clients potentially want. So we're now across the board. I think if we would have looked at these results 12 months ago, I think we would have found a very different result, because clearly 12 months ago, email was hugely dominant. People saw it as a way of continuing to communicate with their potential clients and their existing clients in a very cost-effective way. Fortunately, it seems to be that in the last sort of year or 12 months or so that actually the old ROI argument's reared its head again, and actually mindlessly sending out billions of emails to people doesn't actually necessarily generate response. And certainly what we've seen, so 12 months ago we were heavily driven by digital communications, and we were in that wind, and we made sure that we were able to deliver on those results. Certainly in the last 6 or 9 months, we have seen a significant shift back to direct mail. And actually this is bearing this out quite clearly in terms of the results that are shown there, that people are moving that way. So this will be a really interesting to watch as we carry on with this and using this as a benchmark in terms of where there. One thing I did want to say, the interesting thing about the channel side of it is that I really think that because we talked again a lot about cross-sell, there's a really interesting model in here that we're spending a lot of time investing in and working with our clients on, etc. It's about how you can get the multi-channel opportunities to be exploited. And financial services have a prime example where they have an existing relationship and they're now trying to sell additional products to those individuals. So I think financial services may well be the ones that will lead the way in terms of how you can get one channel to enhance the performance of another channel in order to get most effective way. There's always going to be a space for digital. As you know, Noel, I've banged on about this for a few years. I cannot believe that thus far there's not been any legislation to pull digital communications into line along with direct mail. It seems to be that at the moment the consumers are voting with their mouses and simply just throwing it all in the junk box at the moment, because clearly, and certainly some of the clients that we're working with that are continuing to use digital communications, open rates are climbing, but delete rates are going through the roof.
So email has taken on the mantle of junk direct mail. So email is now junk, is it?
At its peril. Click to unsubscribe is something I do quite a lot. I have to say, I find unsolicited emails far more intrusive than direct marketing. And I would say that, except for 45% of people here, I think the term junk mail is not actually a negative. I think junk mail is actually a generic. But nobody likes to say that, yeah, I picked something up from the doormat, read it, it looked really interesting, and I bought it. But we know a lot of them actually do.
Yes.
And I think mail over email also does have a role in a more considered purchase. Anything from a holiday where you want more information than you can get in an email, through to a financial services product that requires a lot of scrutiny and time. And we know that a lot of people will retain stuff that we post to them and consider it when they next look at their finances. I doubt if anyone's ever going to do that with an email.
No, I think you're probably right. Interestingly, I think that I was berated for this years ago, but I'm perfectly used to being berated. But I think that about 7 or 8 years ago, I was lecturing at a conference, and I stood up and said, I'm really worried about the inexorable connection between direct mail and junk email. And I sort of suggested that we should be trying to sort of detach ourselves, because we would be tarnished by the inevitable brush that was being created through junk email. And I think we are slightly in that. The junk mail becomes a sort of all-encompassing catch-all. It includes door drops and inserts and all those things at the moment, etc. And I do think that we need to help consumers to understand the significant difference between each of the channels in terms of how they're doing it. But we also have to listen to them and deliver our message, whatever that happens to be, in a way that they want to hear from us.
Mm-hmm. So we actually threw this one out to the listeners. The question we asked consumers was, what is your preferred method of marketing communication from financial services? So you still see the slide there. So the brand marketers that are listening today, we asked them, in your experience, do these results ring true? What do you find works best for your acquisition campaigns? And they are giving us a very, very clear picture. Coming top still, Mark, interesting, direct mail, 52% say direct mail still works best for acquisition.
Jolly good to know, chaps.
Yeah. And email coming in right behind there on 30%. Telephone, well, we know we don't. It's a whole separate webinar to talk about telephone. 8%, 8.7%. So telephone works, and SMS 8.7% likewise.
And perhaps this reflects again the sort of, as I say, I think consumers view buying financial services products, whatever they happen to be, with a certain seriousness. And I think actually, direct mail feels slightly more serious as an experiential thing in terms of when you're dealing with it, whereas email feels a bit less serious, perhaps. It feels a bit more sort of, a bit more dangerous, a bit more threatening.
More of the moment, less considered.
Exactly.
Yeah, I mean, Tim, can I ask you, we always imagine that the choice that marketers have is high volume email versus lower volume direct mail, because a direct mail piece costs so much more, a single unit direct mail piece. Is that right?
I think that particularly the direct mail is useful in terms of trying to prompt people to think about their finances. I hesitate to use the words financial capability. Should we say improve their expertise in the long term? And we very much try to do that by showcasing independent experts and ideas in front of our customers to enable them to make the considered choices when they are changing how they're setting up their finances. An email, as I say, I think can point people to a source, but can't necessarily be the source itself.
Have brands covered off the whole green issue now with direct mail? Is that sorted?
Oh, it's definitely not sorted. I mean, I think it's why, in advocating sustainable DM, I wanted to make it very clear that we now need to aspire to the higher criteria of PAS 2020. And I think immediately you do start over-mailing or over-contacting people. On the one hand, they say that's not very green, and on the other hand, they want their provider to be efficient because it gives them better rates and service.
I mean, it's also not very good business, is it,
Yeah.
to mail people who don't want the stuff in the first place. I think it's a very interesting point, and actually we've just rewritten all the environmental guidelines and the DMA best practice guidelines, because I think that it inevitably it slipped slightly down the agenda. It's certainly not slipped off it, etc. But I do think that certainly during 2012 it's going to come back with a vengeance. It's very real. You're probably all well aware that we're currently renegotiating with DEFRA for our next set of targets in terms of recycling. So there is going to be significant pressure from a legislative point of view, but also from an association point of view to achieve these targets. So it needs to come back, and we need to absolutely embrace new ways of working that are sustainable.
I mean, it's an easy win. It's low-hanging fruit for a politician, isn't it, to threaten to impose opt-in to direct mail. We've been there with Mr. Miliband, David, that is. Has that gone away, do you think?
Where is David Miliband these days? Does anybody know? I don't know. I mean, the one thing about David Miliband, and I had the good fortune to meet him on several occasions, and I thought he was very switched on to the needs of what business needed, along with everything else as well. So I think that there was a potential solution there. When he left, we ended up with people who were less business focused and were coming up with really quite stringent suggestions in terms of what we should do. The opt-in argument, the opt-out argument, it's raged forever. Worth noting, of course, that they have just gone to opt-in in Germany. So there is a precedent within the European Union as to how that might work. So we should keep an eye on that one.
Thanks, Mark. And Elise, if we could have the next slide.
I think that's
finished.
it.
We have finished. So one question that's sort of been bubbling under, certainly amongst the marketers that I talk to, is the shift towards consumers becoming more aware of what their data is worth. We've even seen some startup providers basing a business on encouraging consumers to sell their data to them, and them acting as brokers to sell that data back to other brands. I mean, guys, can you envisage a time when consumers look back and say, I cannot believe I gave that brand my email without charging them for it or without getting some kind of value exchange?
Short answer, absolutely not. No, I can't. And I think, let's be very clear. I mean, about the organisations that are purporting to protect people's rights in terms of getting direct mail they want, etc. The vast majority of them are basically sort of convoluted lead generation models, is what they are. Lead generation is very exciting at the moment, and basically it's the simplest hand-up marketing that one could go. So I don't think that's the situation. There are some very real and genuine initiatives, and including the governmental initiative for My Data at the moment. There are a number of organisations that are talking about and really genuinely talking about PDSs in personal data stores. The principle of it is to say that we as individuals, the data belongs to us, and we should have a personal data store sitting within, and inevitably some of the organisations like Google are extremely interested in providing a service to do this because it provides them with a lot of data, where in fact you can then actually take control of the data and you can distribute that data to whoever you want it. I think fundamentally, as you look at these things, actually the framework isn't there, but if we go back to what we were talking about earlier on in terms of data protection and people trusting, are you actually going to open up all this information to a third party? I don't think you are. I think if we were in Japan, where the sort of social awareness of these things and the social acceptance of these sort of things is very different, I think we're in a situation now where the British people just allowing anybody to access their most private information whenever they wanted to, I think is really pretty far-fetched. I think that actually we're at a position now, and I'm really encouraged by this, where actually consumers feel more positive about direct marketing than they have done for many years. And I think as an industry, we're much more on receive mode and listening a great deal more as well. So I think by combining those two things, I think we'll be in a position where we're not doing it too wrong. Some people will go down this road, but I think there will be very few early adopters and probably even fewer going forward.
On that point, actually, Mark, Graham McDermott from the A again is asking us as panellists when and what was our last purchase triggered by direct marketing and through what communications channel. I can tell you from my point of view, it was the Bowden catalogue coming through with the 15% off offer. I went onto my laptop and I purchased immediately. Mark, have you?
Well, I mean, this won't surprise Graham at all. On the basis that I got an email from Callaway about new wedges, and I bought them.
So not another Aston Martin.
No. I always, I'd have to get direct mail for one of those. You see.
I have to say, I haven't made a major purchase lately, but I have been prompted to review holidays by a sun sale offer and a couple of others, which means that I'll stick with them, and I'm very happy for them to have my details, and I probably go on one of those every 2 or 3 years, so it's worth them keeping me in the loop. What I would say is that take those as trusted brands who behave in the right way, and I bet they're surprised at how many people are opting out. And I think more and more people are trying to sift through and dump people who are mailing them or emailing them because there was just starting to be too much. And I think if we look back a few years to the situation that led to the telephone preference service coming in, far from people unsubscribing, there is a danger that people will actually get quite militant about the sort of behaviour that you describe, where people don't think they're getting a fair value exchange. And then maybe it is quite legitimate for politicians and the like to say to the industry, if you don't raise your own bar, we're going to raise it for you.
Elise, what was the last thing you bought?
I was just thinking about that. Actually, it was something from ASOS, as seen on screen, the retail website, and I was prompted to make a purchase based on a 15% discount, I think it was, on their new summer range.
Works every time.
Yes, I'm wearing them today.
I can vouch for that, everybody listening. There's a comment here from Colin McDougall of Access on Life. He's saying, well done, Tim, for promoting past 2020. I was just about to suggest that you did, he's saying. We have had this standard for over a year at Access on Life, and it has resulted in not only reduced costs in terms of wastage and postal discounts, but also reduced complaints. I mean, that's win-win, isn't it?
Yeah. And it's good that that exists so that people can get the credit for the work that he and other people have done to achieve and retain that.
So I think we should wrap up at this point, and I'd just like to thank everybody for listening. But I'd like to just go to Tim and to Mark again, just to sort of sum up, both what's come out of this report and what you're sensing, from this discussion, certainly from what Tim is saying, and Mark, what you're saying as well.
I mean, to do it in a couple of lines, I think what it does show is expectations. So, as it were, the stakes that we're all working on are rising and rising. And if we don't meet those expectations, we will fall away and other providers will come in. And at its very worst, people will get really fed up and start being quite militant about a subject where we should be helping the great majority of people to engage in their own financial capability.
I think really we have to, as an industry, and I suppose we obviously work within all sectors, but financial services were the great shining example of what direct marketing was about. And I think that we can return to those days. But I think at the centre of this, and this is becoming increasingly cliche, but it is oh so right, we have to have an industry which is consumer-centric. We have to leave behind the bad ways that we had before, etc., and we move forward. I see good progress, and I talk intelligently to people who are acutely aware of these things, and they are creating a change in their behaviour. We must change our behaviour in order to change perceptions. Perceptions, I'm sorry, are the absolute reality of a consumer, and the only way we're going to change those perceptions is to do things differently. And the idea of this report was to allow people to understand what the challenges are, so in fact they can then drive their actions accordingly.
Thanks for that, Mark. And just to remind everybody listening that, again, this is available on demand. Share with your colleagues. From tomorrow on Brand Republic under the archive webcast section of the site. The full report, I'm delighted to say, will be sent by email not by post, by email from the Red Group to all of you tomorrow, and I wish you all a very good afternoon.